In today's changing world, fast decisions need to be smart decisions. That's why Workday delivers quick insights to help your finance team plan for what's next. Workday, the finance, HR, and planning system for a changing world.
In Colorado, 10 people are dead, including a police officer, after a shooting at a grocery store.
All of a sudden, we heard in succession, boom, 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 and by the third one, we're like, got to get out of here.
We'll have more on this developing story. Plus, the stock market sees some success, even during the pandemic.
The climb back started with investors piling back into growth and tech stocks, and that's carried so much of the market upward for the last year.
We'll take a closer look behind the bear to bull market shift. Plus, an encouraging sign for retail, not on Main Street, but at the airport. It's Tuesday, March 23rd. I'm Mark Stewart with the Wall Street Journal, and this is what's news. We begin in Boulder, Colorado, just outside of Denver. A gunman killed 10 people, including a police officer, at a supermarket on Monday afternoon. A suspect is in custody. We heard from a shopper who was inside the store at the time.
Once there were more shots, it was really loud in the store, but it went 15 to 20 shots in 15 seconds. So it's really fast.
At this point, it's not clear what prompted the shooting. Here's the WSJ's Zusha Ellenson.
What we know so far is that the suspect showed up at the supermarket there. He had an AR-style rifle. He was apparently shooting in the parking lot as well as the store, from what we know. And then he was captured alive and led out in handcuffs. We don't know anything about the suspect. We don't know his name. We don't know the motive. Nothing from witnesses or law enforcement at the moment.
The officer who was killed is identified as 51-year-old Eric Talley, the first officer on the scene. The Boulder police chief spoke last night, describing his actions as heroic.
My heart goes out to the victims of this incident. And I'm grateful for the police officers that responded, and I am so sorry about the loss of Officer Talley.
The story is still developing. We'll have more throughout the day on WSJ.com. U.S. health officials are raising concerns over AstraZeneca's COVID-19 vaccine efficacy data, saying the company may have released outdated information in its disclosure of trial results. The National Institute of Allergy and Infectious Diseases said an independent monitoring board working with the drug maker in its trials raised concerns with the company's data disclosure. AstraZeneca wasn't immediately available to comment. On Monday, AstraZeneca released interim data from large-scale U.S. trials that it said found its COVID-19 vaccine to be 79% effective in preventing symptomatic disease, and that it intended to submit the vaccine for emergency use authorization in the U.S. GameStop will release its quarterly earnings today, its first since a Reddit-fueled stock rally. We're getting some insight into the Biden administration's potential infrastructure and economic package. It would be in several different parts and could cost as much as $3 trillion, according to people involved in the discussions. They warn that the strategy is preliminary. The first part would center on things such as roads and bridges. Then measures would focus on education and other priorities. The White House declined to elaborate on the proposals under consideration. Fed Chair Jerome Powell and Treasury Secretary Janet Yellen are scheduled to testify this week before the House Financial Services Committee. In prepared remarks, Powell has said that the U.S. economy remains far from complete. That's despite recent improvement. He also said that the central bank plans to continue providing support. And Twitter co-founder and CEO Jack Dorsey has sold a non-fungible token, or NFT, of his first tweet for $2.9 million at an auction. It's the latest NFT to collect more than $1 million. The CEO of a Malaysian blockchain company is the winning bidder, and he couldn't immediately be reached for comment on Monday. Just ahead, some stocks see dramatic growth during one of the toughest times in our economy. What's behind the bull market? After the break.
Adapting to change is more important than ever. That's why over 45% of the Fortune 500 rely on Workday, the enterprise cloud that prepares you for what's next. Workday, the finance, HR, and planning system for a changing world.
A year ago today, U.S. stocks bottomed out, but since that pandemic plunge, something almost unimaginable happened. Wall Street quickly shifted from bear to bull market, setting new records along the way. On this anniversary, we wanted to take a look back to see how we got here and discuss where we might be headed next. To do that, I'm joined by the WSJ's Caitlin McCabe. She's on the markets beat and is well equipped to explain all of this. Caitlin, good morning.
Hi, thank you so much for having me.
So, Caitlin, at the beginning of the pandemic, we saw all three major U.S. stock indexes plummet. The S&P 500 fell by 34% in just 23 trading days. Now, fast forward, all three have rebounded strongly. The Dow is up around the 33,000 mark. So, big picture, what played into this turnaround?
Yeah, so it was an exceptionally fast turnaround. You know, we saw this incredibly steep and quick plunge, and then it took just 126 trading days to recover back to the February 19th closing level where we were before the sell-off that happened coinciding with the COVID-19 pandemic. So it was one of the fastest recoveries on record after such a steep plunge. And I mean, really, the climb back started with investors piling back into growth and tech stocks. And that's carried so much of the market upward for the last year.
Yeah, and since you mentioned tech stocks, it's important to stress these gains have not been seen across all sectors.
Exactly. So, you know, after we reached this bottom on March 23rd, 2020, it became pretty clear pretty quickly that investors were concentrating their money in growth stocks and big tech stocks. And so you saw big gains right off the bat in what traders like to call the FANG stocks. And so that stands for Facebook, Apple, Amazon, Netflix, and Google's parent Alphabet, which spells out the acronym FANG. And these companies are so large and they comprise so much of the S&P that was helping push the S&P 500 up. But you weren't just seeing growth in big tech. You were seeing, of course, traders really interested in companies like Tesla. You were seeing Zoom, you were seeing just all of these growth and tech companies rising because, I mean, one simple explanation for it is that they were the companies that were, standing to benefit the most from the pandemic. You had people shopping online, you had people using cloud computing and, video messaging software and things like that. And so that was really driving the market upward. Of course, there was from time to time rotations into cyclical stocks and more of your industrials and energy and banks, but it really was for so much of 2020 just the growth in tech leading us ahead.
And then, Caitlin, more recently, we've seen a stall in U.S. stocks. The NASDAQ briefly went into correction territory earlier this month. Last week, all three major indexes lost ground. What's going on here?
So since the start of the year, we've seen this really steep and swift move up in bond yields, and that's had a ripple effect across the market. So the short version is basically that the economy is recovering, people are getting vaccinated, and investors are really looking ahead to a summer or a fall where things might be returning back to normal. And so, of course, there have been some concerns of inflation creeping into the market. And so that's driven bond yields up, which has an impact on assets across the market. And so investors have been dumping shares of tech companies, basically because, higher yields can mean higher borrowing costs for businesses. And higher yields also make investors reevaluate how much they're willing to pay for future earnings. And because significant earnings for tech stocks are expected to come in the future, it makes investors basically question how much they're willing to pay for those earnings. So, you're seeing investors pull back from tech. You're seeing quite an uptick in energy and banks and other cyclical stocks. So it's going to be really interesting to see how long lasting this trend is.
And finally, Caitlin, you talk to traders and to analysts. As a markets reporter, what's piquing your interest for the future?
I think we're in this really interesting period in markets where right now so much of what's happening in the growth versus value trade is very, fundamentals based, and people are trying to evaluate the impact that yield will have on tech stocks, like I mentioned, and growth companies, and what that will mean for banks and energy companies and everything that we've talked about so far. But then you have this whole other segment of the market that is less connected to fundamentals right now. We saw the massive rise in the meme stocks earlier this year, the GameStops, the AMCs of the world. We have this ongoing SPACs craze, cryptocurrency, that market is incredibly interesting. It's just going to be really interesting because you have these two kind of branches of the markets that are going on right now, where there's just this euphoria in some segments, and then everyone is also trying to drill down on this value versus tech trade. So I'm just going to be really interested to see what happens, especially in these other segments of the market, as we see more interest among retail traders, as we see this SPAC craze probably only going to continue to grow, and see what effect that has on the broader market.
Markets reporter Caitlin McCabe. Caitlin, many thanks.
Thank you for having me.
And finally, there's a rare bright spot in the world of brick and mortar retail. Not at the mall, but at the airport. The Journal's Esther Fung has been looking at why some airport retailers are feeling encouraged after the pandemic caused a sharp decline in air travel.
In the U.S., domestic travel has recovered more quickly because people are allowed to travel across different states, and that has helped some of the retail stores in airports that cater more towards domestic flights. And with vaccinations continuing to progress in the United States, these airports have also seen passenger volumes increase in recent weeks, and the industry hopes that this recovery is on a firmer footing.
And that's what's news for Tuesday. We're back tonight with a new show. If you like us, please rate and review us wherever you get your podcasts. I'm Mark Stewart with the Wall Street Journal. Thanks for listening.